What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Monday, April 8th. All right, guys, SPY here on Friday finished the day up $5.36 a share. That's plus 1.04%. This morning, we, of course, got the jobs report. U.S. unemployment came in as expected at 3.8%. Average earnings year over year came in as expected at 4.1%. And U.S. non-farm payrolls came in above the expectation. The expectation was 214,000. We got 303,000. So the market grinding higher through the morning on that news. Let's take a look. All we have going on Monday, just as for a heads up, is Kashkari is speaking. That'll be in the evening. Just know that Kashkari is a notorious hawk. So I'm keeping an eye out on that. But let's take a look here. Let's try to pull out as much bias as the market was willing to give us here today to try to get a really, really deep understanding of SPY. Heading into Monday, we'll finish out with the options chain directional bias and the expected move. Let's take a look, starting with doing a quick analysis of the volume profile here on the 5-minute chart. By the way, guys, the new upload schedule is live. It's here. It's going on right now. So SPY is now a daily upload. Every single weekday, the SPY video hits at 6 p.m. Eastern time sharp. So listen, if you have not done so already, please subscribe to the channel. Helps out tremendously. Now let's take a look. The moves that I'm primarily interested in looking at the volume profile on SPY here, honestly, I want to look at the entirety of that morning move and then this fade move are what stand out to me the most. Let's take a look starting from left to right. We have a very contextual open. This over here is off the data. The data hit at 7:30 Central Time, which my charts are central. But by the time the open came around, very, very normal. Bit higher volume on the open and then a fade and a little bit of choppy volume. I mean, it is SPY. It's not going to look exactly like a blue chip, which tends to be a little bit more clean. SPY is actually a little bit more choppy, especially on a day-to-day. But there's really no bias there in the morning, which I thought was interesting. We do start getting some consecutive green bars here in the middle of the day. However, for me, it's the volume level is not out of context at all. On this move to the downside, we started to see an increase in red volume that got broken up by a single green bar. It's not tremendous by any means. Not only is it getting broken up, but it's just barely higher than what would be expected. And it's really only two consecutive broken up and then a third red bar. But bulls, just understand that you're going to see some bears likely if you're hanging out in chat rooms over the weekend or maybe in our free Discord talking about SPY, whatever it may be. You're likely to see some bears calling out. Well, I don't know, likely. I don't know how many people are really diving into this quite this far. But if you see anyone talking about the volume profile bias, they're likely to call out a little bit of early afternoon or mid-afternoon more so bearish bias. For me, it's incredibly slight. Okay. Now, you guys know on SPY that last volume bar of the day, typically we don't see a ton of movement. You can see it's not a tremendously large candle. This is rebalancing volume. Funds, institutions, on SPY, on a lot of blue chips, it's actually interesting. You see this happen on the first candle after the bell. On SPY, you typically see it happen on the last candle of the day. Okay, so to me, that's nothing to worry about. It's almost nothing to even consider unless we see sizable movement on that last bar, which we really don't. Now, let's move on here to the self-fulfilling prophecy psychological levels that I'm paying close attention to here come Monday, and traders are going to be as well. So let's start with the 30-minute chart. You'll notice my chart is very basic. All I have are those psychological levels, the 200-period moving average, that gray line, and the 50-period, which is that white line. So if you guys remember Thursday's video, we gave up that 50-period, and we gave it up hard, okay? And we were, it was looking a little rough. We were pretty far away. What happened today, though, was actually tremendous. I mean, a 1% move on SPY doesn't happen every day. That's a slightly higher volatility day, right? It's not an everyday occurrence. This 50 period on the 30-minute aggressively came downside. We reclaimed it, which is beautiful. Off the open, we tested the 200 period, which didn't even come down nearly as much as the 50. Of course, it's a slower moving average. It's a slower moving average. We faded off of that test and held right up against it into the close, of course, holding the 50. Now, we didn't get a retest of the 50, at least a real one. It was a little bit sloppy. I prefer a retest, but a pull away is fine. Okay, bulls, come Monday, Listen, a reclaim of that 200 period, meaning a break upside through on high volume, low volume retest ideally. I like to see that confirmation, and then high volume confirmation on a bounce. That's my ideal scenario. Okay, whereas you bears, you just want to reject off that 200 period as hard as possible on as much volume as possible and head down to ideally get back beneath that 50 period. Because these are psychological levels, right? You'll see that we typically end up seeing a little bit of movement, a little bit of decision making, right, around these levels, because there's a lot of eyeballs on these, and the 30-minute chart is one of the most popular charts that people watch. So you better believe they're making decisions around these levels. Now let's take a look and move on to the 4-hour. You can see here, man, a beautiful day actually for SPY. Yesterday, you guys remember we talked about Thursday, right? We closed testing the 200 period. And I'm not going to lie, that made me a little bit nervous, because if the bears were able to continue momentum, perhaps off some bad jobs data, you know, that means a breakdown side of this now on the 4-hour, which is just an added negative psychological factor. With the help of some jobs data, we held that level hard with, you know, a slightly above average volume pull away from that 200 period here on the 4-hour chart. And we got rejected off the 50 period, right? You can see that's a very obvious rejection getting hung up by the 50 period here on the 4-hour. Again, a lot of eyeballs. That's self-fulfilling prophecy mentality, okay? We got rejected and closed a little bit lower, but come Monday, guys, we find ourselves now less than 0.4% away from that 50 period. Bulls, if we could get a reclaim of the 50 on Monday, again, a test and then a confirmation, that would be wonderful. Right? Whereas you bears, you guys have a little bit more work to do to get back beneath that 200 period. You're looking at about a minus 0.9% move just to test that. And if you're also a bear, any upside test of that 50 period, you guys would want to see a rejection similar to what we saw today, just on as much volume as possible. Okay? Now, I know it's a lot, right? But let's take a look. The daily is really the most important. Okay? At least on a typical day. The 4-hour is, I mean, honestly, guys, the 30-minute and the 4-hour are both very, very important, likely more so than is typical heading into Monday. But the daily plays a tremendous role because this has the most eyeballs by far. So let's take a look at the obvious story. First off, I just want to show you guys something quick. This was a poll I ran on Thursday night heading into today, Friday. Okay. And we got to close on SPY on Friday at 518.43. So you can see here that the majority, and I was keeping track, these votes didn't come in after the fact. The majority, 28%, actually voted and got that correct. So I'm going to run these polls every single day. I think it's a great way to get a good sample size of what retail investors, like what's the sentiment, right? Because I think it's sometimes difficult to really understand what the sentiment might be. Even by checking social media, it's kind of hard to tell. This is just super definitive, and I think it's interesting and kind of fun. So I'm going to keep running these every day. Feel free to vote. You can just find that in the community tab on the channel. But if we take a look here, guys, you can see we got rejected off of what was that, you know, you look here, that 50 period on the 4-hour. But if we look at the daily, you guys know that on SPY, every $5 increment is a relatively meaningful psychological level. We reclaimed 515 here today on Friday. 520 is kind of that next stair step back upside. Bulls, a close above 520 come Monday. Great. That's beautiful. Bears, a close back below 515 come Monday. Equally great for you guys. Now, the volume variation, like the high volume on the break, low volume retest, right? High volume confirmation. I'm just going to leave it at that. Obviously, the volume still applies. But it's very simple on the daily, okay? And I'm going to keep it simple because the 30-minute and the 4-hour, I mean, for a lot of people, it's complicated enough, right? But very simple here on the daily come Monday. Those psychological levels, ideally, you just want to see a reclaim. By the way, expecting a little bit of psychological hang up upon a test if volume is not especially high coming into that test. You're going to see some traders making decisions around those psychological levels, so pay attention to that. Now, the expected move, guys, on SPY, we are spoiled. This is not the case on other tickers. Right, April 8th, we have an expiration for every day here, right? We don't have to do any math, any guesswork whatsoever. The expected move, the volatility expectation for Monday at the close out of SPY is plus or minus $3.76 per share. Okay, so the options traders expect SPY, the one standard deviation expectation, right, is to either be up that amount by close on Monday or down that amount by close on Monday from the close here on Friday. Now, we do the volume profile, we do the psychological levels, we do the trader levels, the technical levels, we do all these things to try to establish whatever we think our directional bias might be. Okay, we have one more trick that we're going to take a look at, the options bias. But the expected move is the volatility bias. And I know a lot of you guys trade options on SPY. That's likely why you're here, okay? And if that's the case, if you're an options trader and you're ignoring the volatility expectation, you're reading half the page in a book and skipping to the next page. You're going to have no idea what's going on. You can't ignore volatility expectation because it impacts how your options are priced through the Greek vega. Okay? I mean, you have to understand that you can be right directionally and still lose money if you were wrong on the volatility bet that you made. All right, so pay attention to that. It makes a much more well-rounded trader, and I think it makes you a much better trader. And it's not all that difficult to start paying attention to and learn. Now, one more trick up our sleeve here. The options directional bias. 9.3 million total contracts traded on Friday heading into the weekend. 3.8 million of those were calls, and 5.5 million were puts. So we're seeing a put side bias on the overall. And if we look at this, take a look. The 0 to 20 delta range, right? Those are the short-term bets being placed. Those out of the money, gambly style calls and puts from the short-term speculators. 1.34 million calls, 2.44 million puts. So we're also seeing a put side bias out of the short-term speculators as well as that overall ratio, which is, it's very interesting. But again, keep in mind, this is just one factor. But it's a big sample size of volume. Okay, but it's one factor of many. Listen, guys, if you're getting value out of these videos, again, SPY is a daily upload hitting every single day the markets open at 6 p.m. Eastern time sharp. Please subscribe to the channel. Helps out tremendously. And I'll see you in the next one.